separating, dividing the people. Our government is out of control. Central bankings are out of control. They don't care about the people. Pension funds, the retirement funds, it's not sustainable. And hopefully, then people will understand that centralization is not the way to go.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Once again, if you are new to this channel or you have not already done so, please do subscribe, click on the bell to be notified on new updates, and do give us a thumbs up if you like what we do. We appreciate your support. Today, we have with us Claudio Grass, a Mises ambassador and an independent precious metals advisor based out of Switzerland. Claudio is a passionate advocate of sound money, which he believes is inextricably linked to human freedom. Claudio also writes about money, banking, and the global economy for the Mises Institute, and we are delighted to have him here again today as the return guest. Good day, Claudio, and welcome back to SBTV. How are you doing?
Patrick, doing fine. Always great to have you on the line.
Yeah, great. Glad to have another opportunity to speak with you. I think the world's changed in just that last 1 year that we last spoke. So good to have you back on. Claudio, I went on to Google and typed recession, and there are a lot of articles warning of a looming recession. Mainstream media is now also reporting that a growing percentage for the chance of a recession is happening. Economic data from all over the place is saying the same thing. We've had an inverted yield curve, unnaturally long economic expansion, German industrial orders, freight volumes, on and on and on and on. Can you share with us your view on this growing narrative of a coming recession, market crash, or financial crisis, whatever you want to call it? And is this nothing new or something investors need to pay attention to?
Well, I think what I witness is that, people feel more unease, so on the common ground, amongst the general population, but even amongst the bankers, they understand something is going wrong in the wrong direction with all these negative interest rates, and of course, that the central banking basically made a U-turn. I truly, we are expecting a recession for a long time already. But even when we look at the U.S. manufacturing index, it's tumbled to a 10-year low. The service sector declined the lowest in 3 years in the States. Germany has an industrial order who fell 0.6%. So the economy is really, economy overall is shrinking in Germany. And even China has, a problem with industrial output. So overall, and on top of that, of course, we see pictures from Lebanon, Chile, Argentina, Indonesia. So it's really showing that there is something coming, and I think people understand. Even amongst the bankers, I think Merrill Lynch made also sent out a questionnaire to their clients. So I think it has changed. A lot of people are expecting a recession anyway, and I think there is one coming. And we basically in Europe expect, really a banking crisis within the next 12 months because, the banking system has been squeezed. All these models haven't been made for negative interest rates, how they look at, certain creditor risks and so on. So people don't know how to interpret that stuff. And for a long time already, we have negative interest rates in the Eurozone and also in Switzerland for many years. And I think now basically it's pushing through because, all the GDP data and so on, it's a bogus number anyway. We cannot trust the GDP figures because there's also government debt is included in if they inject credit into the system, it's added to the GDP, which doesn't make sense at all. And then, of course, CPI, inflation measures. We are in negative territory basically all over the world, especially in the States, even without having negative interest rates. At the end of the day, with inflation and the low interests which are given, it's all negative. So they are really stealing from the savers these are the punished guys, and the debtors basically are in favor. And this is something which does not make sense economically. To basically have a negative interest rates on debt. So I think, it's huge. I mean, it's completely insane. It doesn't make sense any longer, and we'll see, what the future will bring. But definitely, volatility is back.
Apparently the recent spike in repo rates due to a sudden liquidity crunch was a so-called rare event. Do you think that this is pointing to a deeper problem in the financial system? I mean, I know you were just touching on it.
Yeah. Well, since middle of September, I think, the Fed added 185 billion to their balance sheet. So, and even the repo case, we knew it, from 2007, before the crisis, basically, we saw those kind of incidents. Of course, they were able to fix it immediately. But of course, it just shows there is stress is back. Even banks don't trust each other to lend money. So we'll see, how further it will go, and if it's becoming even. You never know, because sometimes it really can last longer than we think. But at the end of the day, these signs are warning signs. That's for sure.
Yeah. And I think even the IMF also came out recently and warned that we may now have limited ammunition to fight a recession. It's no surprise. For example, the Fed's balance sheet, as you mentioned, it's quadrupled since 2008, and the ECB has cuts into negative territory. Cut rates, I should say, into negative territory. Do you think that the money printing solution of central bankers in the last 10 years is finally showing its limits?
Yeah, absolutely. By just injecting money created out of thin air, that does not add any value. At the end of the day, it's basically just spiking up certain asset bubbles, and I think that's also leading, to the fact that the gap between the poor and the rich is growing. So we have certain guys over here in Switzerland. They are now worth 3 billion, but of course everything is in their stock or in their company, or completely, the real estate. Everything is overvalued. So people only profit. You have to keep the system alive, and that's why they are injecting liquidity into it to solve the issues, to paper it over. But we had the debt crisis in 2008. We tried to solve it with additional debt, and I always refer to this. 1 trillion is basically in seconds. It's 31,709 years. So, and they injected roughly 80 trillions over the last 10 years. It just shows they bumped us back 80 times to the Stone Ages. And I think now, the problem is that, you always have to pay it back, or you have to cancel it. And but you cannot go on forever. Everything comes to an end suddenly.
We've asked a number of guests on our show what they think the next crisis will sort of look like, and the reason we ask that is because of the 2008 financial crisis. It exposed the fragility of our modern debt-based financial system, and when the counterparty chain begins to fail, the house of cards all starts to come apart, and the fallout of that crisis adversely affected thousands of jobs, destroyed wealth. So if a train wreck is coming, we want to warn our followers as much as we can for them to get out of the way in advance. Claudio, what's your view on the coming train wreck of the global economy, and how serious this time do you think it's going to be?
Yeah, that's a good question. I believe in the long run, it will be disastrous, because at the end of the day, you can by just injecting liquidity or money out of thin air, it leads at a certain point to hyperinflation. So of course, but in the meantime, these negative interest rates, of course, it helps them to let some air out of the debt balloon. But at the same time, it's really destroying, the last sound people which are living in each region, because the pension fund, the retirement, all the government promises, all these unfunded liabilities. At the end of the day, they are sometimes 18, 20 times higher than the official debt. So all these promises by the government, I think we have a huge issue there. Pension funds the retirement funds, it's not sustainable and it's not financeable, with those kind of interest rates. So I mean that has been already, quite destroyed. Let's call it that way. I don't expect that I receive anything from the government in the next, when I'm retired once.
Yeah.
And now, of course, the insanity or the evil thing is that even those guys who had something on the side, that they now have to pay for it. And this is, this in combination just shows, government is out of control, central bankings are out of control. They don't care about the people. They only care about their establishment figures and try to keep a centralized system alive by centralizing it even further. And by allowing, the big multinationals profiting from it. And of course, you have these zombie companies in the Eurozone, but as well also in the US, which is roughly 15%. So yeah, you can paper over certain things for quite a while, but I think we are coming closer to the end of the current debt cycle.
Yeah, I'm curious about the pension funds. You touched on that as well. You're obviously attuned to your pension fund may not be there, but I mean, I know Europe is made up of a lot of different countries, but Europe in general, do you think most Europeans, do they feel their pensions are going to be there, or are they kind of getting a feeling that, hey, my pension just might not be there?
I think the belief in the nanny state. We have been trained to believe in the nanny state since childhood. So, and then of course, people don't like risk, and hope always dies at last. So I think some people feel nervous. I mean, that's why they have, open discussions how to reduce, pension fund or retirement funds to decrease, the interest rates which they have to achieve. So taking that down. But at the same time, of course, in a debt-based system, you have to grow. The credit system has to grow. If you cannot grow, it's going to collapse. And so we have the financial side, which is completely in a mess at the end of the day. And on the other side, of course, we also have the demographic issues. So, we have less people paying into pension and then retirement funds, and more people basically being retired. Of course, that's why we see most likely this UN migration agenda, which they try to bring in some fresh blood. But unfortunately, it's just crashing the current welfare system. So that in combination is going to shoot back. I mean, it's I also, when I became independent, one of the main reasons was I wanted to take out my pension fund. I don't trust the government. So I thought, I cash in and I do with the money what I believe is the right thing to do, and keep it out of the system because, it's a long term, basically I have it, it's my pension or it's, money for my kids. And I truly believe that, the current system is just going to lose, the average person is going to lose in that system. Definitely. We don't belong to the 1%, which might profit from that kind of redistribution at the end of the day. So to me, I think it really makes sense, you can remain in the system if you want, but you need to have definitely a hedge or an insurance which is outside the system and which is physical somehow and tangible and has no counterparty risk and no liability to another person. But people are. Look at gold right now, for example. Even the last few months. The price of gold was not spiking because we had much more people in the retail market in the West buying gold. The prices were spiking because we have central banks, ETFs, the East, which is still buying more, and they basically drove the prices up. And when I look at the Western world, when I talk to my partners, which are in the States, but also in Europe and Switzerland, they're telling me that 70% of all the trades were people were selling gold. Mainly most likely these guys who got in 2010, 2011, and now they were sitting on their gold, and now they thought, hey, that's a good that's a good exit, because they don't understand why they did it, because they were driven by fear and greed. And of course, fear and greed is always, when the bull market is at its end, then you have all those people moving in. But it's interesting to see that it's not, that only a few people started to repurchase and use those great levels, I think, for gold. Especially now that we have we have an honest zero interest rate on gold. So the upside potential is much higher, and the storage fee and insurance fee which you had to pay in the past, these opportunity costs are gone, especially if you are somewhere in Europe or Switzerland. And at the end of the day, if you really think it through, also in the States.
Okay, there's also been a growing discontent with major U.S. trading partners like the EU, Russia, China, about the U.S. using the dollar as a weapon to get what it wants. For example, the president of the EU Commission, Jean-Claude Juncker, said last year that it was absurd for European companies to buy European planes in dollars instead of the euro. From your vantage point in Europe, do you see the de-dollarization theme to be very real, and is it gaining more traction?
I mean, there are definitely certain initiatives in Europe, Russia, China. I mean, they are building up an alternative system to SWIFT, which is heavily dominated, of course, by the United States, which use that system as a political weapon. And so I think, there is even this, even China with the one belt, one road initiative. They are thinking about a new currency basket, which is backed up by physical gold, but also by currencies from those countries. But they also think about taking in gas and oil. So really to come up with a kind of basket which is a mix of hard assets, but also their fiat money over there. So I think, we are, the older strategy, we are living in a system of Hegelian dialectic, meaning, problem, reaction, solution. And at the end of the day, it's always, you have to divide the people to make sure that they also start then fighting each other. And I think that's what we see on a wider scale. That's what we also see with Trump, because, Trump is really also dividing America, but it's also dividing on a global scale, because the whole establishment, of course, is against Trump. But if this is really, I don't believe that anything happening in politics by coincidence. So I think even Trump had somehow was part of the game. Also, he has now a completely different message. But at the end of the day, it's just separating, dividing the people. And when I see what's happening in the States at the universities and also here and Germany and the Green movement, which is a completely false debate, because they're not even focusing on. I mean, we know that CO2. I mean, if it's really I don't believe it's man-made, but if you really would focus on that issue, we know that 100 companies are producing 85% of all the CO2 man-made, based on their statistics. So instead of going against those big multinational 100 companies, which are government-owned, or in the hands of the big corporations, they are rather preferred to focus on a climate debate where they cannot influence anything at all anyway. So it just shows. I mean, if the current system in combination with the green movement, if these guys really succeed, it can really go extremely fast in a very, very wrong direction.
Yeah, I hear you. But how do you think the euro is going to fare in the near future, given that the U.S. basically has pushed the EU into the arms of Russia and China, since they share common pains with the U.S. and the dollar?
Well, I mean, I don't see a bright future for the euro. I mean, I truly expect this banking crisis is going to happen, and when this will happen, then it might be that we see again a flight into the biggest bubble most likely is going to burst the last, and that still would be the U.S. dollar. And so it might be that the euro is, I mean, it can fall apart. I mean, I don't believe that the euro might be around in 2-3 years time. I think, sometimes when stuff is accelerating, everything can happen very, very fastly. But on the other side, I mean, as long as the system goes on, we might have the Chinese jumping in and helping the euro. I mean, that's also possible. We don't know yet. But at the end of the day, I think what can be said is, that all these fiat papers are in competition downwards. It's a race to the bottom. And just because some issues have an impact, a short-term impact on the US dollar, I mean, the dollar cannot go up because that's what we have seen. That's why, they reduced now twice the interest rates. And I think if the dollar becomes, under such a circumstance that the dollar becomes too strong, I mean, they would also have to print and take interest rates lower and so on. So, I mean, get out of the system. I mean, get out. You remain in the system, but at least, make sure that you have something out of the system, and then I think people can sleep better.
Yeah. You said something kind of interesting where if the euro, the currency euro is basically, let's say it falls apart or dissolves, whatever it may be. How about the EU, the European Union? Does that still stay intact, or does that start to dissolve as well?
Well, I think under these circumstances, I believe that the whole European Union would fall apart.
Okay.
But as I said, right now, we still have this Brexit.
Yes.
And you had people in the past saying, the Brits have to leave because Europe wants to become more totalitarian or more centralized even further. They cannot do it with the Brits as long as they're in. So we'll see what's happening by the end of October. And Europe as such, France is a huge problem. I mean, Germany is basically, Germany is guaranteeing, the credits to the rest of Europe, so that they can buy goods and services also, from Germany. But now we see everything is, it's getting harder and harder. And you can only take on a certain level of debt. Yeah. And then it really becomes a problem. And that's where we are. I mean, so, I'm not very positive for the Eurozone because, even Italy is a big mess, Spain, Portugal. I mean, the whole Eurozone.
Yeah, I think even Greece was in the news also recently, where once upon a time Greece was in such a huge crisis, and now it joins the negative interest rate club. What do you make of this?
Yeah, how can we describe insanity in another way? I mean, it's absolutely ridiculous. And and as I said, one fine day, people realize that James Grant, James Grant said something the other day, and I really like it. He said, negative interest rates are unsustainable, and once investors decide to stop paying for the privilege of holding government debt, a banking crisis could result. And so James Grant definitely is is a very great economist, a great guy. So very hesitant, of course, with his message. But I think, it does not make sense. I mean, we are living in a world where fundamental principles are not respected any longer, and we have a certain propaganda which is trying to convince the masses that it can, that the night can be day and the day can be night. So we'll see. At the end of the day, it's people perception still. It's not happening from one to tomorrow. It's really happening when people lose trust in the institutions, and we are on that process.
Okay, Claudio, $1 million question. Is the root cause of these things, I mean, does it trace back to when fiat currencies became unbacked by gold?
Well, at least it allowed. Look at the total debt since 1971, and we can break it down into certain countries. But I think even the U.S., maybe 98%, 99% of all the debt have been created since 1971. So that just gives you an idea. So it's because even Switzerland, Switzerland is another great example. We had a balance sheet of our Swiss National Bank had a balance sheet of 50 billion back in 2000, for example. And we were going off the gold standard in 2000, and now we are standing. We have a balance sheet of 830 billion. So it just shows. I mean, of course, if gold backing has always kept central banking from just printing like crazy, because they needed to back it up with a certain amount of gold. And of course, since that is not the case any longer, they basically had the possibility to print much more. And of course, the U.S. used the petrodollar and all the commodities basically to make sure that they have a solid and in every way an artificial demand for U.S. dollar to switch it from gold to the dollar to the petrodollar. But I think this is now also coming to an end. So,
do you think if the U.S., let's say, renegotiated or got rid of the petrodollar deal, because basically it was made when the U.S. was the largest oil consumer, Saudi Arabia the biggest oil producer, but it's almost 50 years since then, and things have definitely changed. If the U.S., let's say, it kind of toned down the petrodollar or renegotiated, walked away, whatever it is, you think that might help solve a lot of the issues that are going on right now?
No, I don't think so. I mean, we cannot. I really don't expect anything good from the deputy of God on earth. I mean, they're really, most of these guys, are so heavily corrupted. Some are even, I would even say, some of these guys are pretty evil. And others are just brainwashed, elitist intellectuals, which have been raised in a way that they have been taught all the time that these are the guys. They're not much smarter than the others. So, some of them, they really have a very strange way how to look at themselves. So, they will not come up with something which would be radical enough to change it. I mean, catalysts, we already see catalysts for this. I mean, we have seen, gold is definitely something, and I really expect a lot from the distributed ledger technology, the blockchain, basically really establishing a new network which can link people peer to peer without having a bank or a central bank in between. So I mean, the internet, we are restricted in our physical world because the government controls everything. But on the other side, in the digital world, we still have a lot of freedom, as long as we don't deal with Google and Facebook and go for decentralized services, which have companies who have been built up in the past, basically really to spy on us and so on. But I think, really the spirit is there, the technology is there, and we have a lot of so-called crypto anarchists, which are liberty-loving individuals. And if people are conscious how to use the internet today, and also which kind of tools and services, they can have already bigger privacy than a king. So it means to me that people should remain open for the technology, what's coming out from the internet industry, because it will. We don't have to kill the king if we can just ignore him. And that's basically the transition period. And then what will happen or what come out of it in the future when the system will really go burst, I hopefully, then people will understand that centralization is not the way to go, that they really understand decentralization, subsidiarity, those kind of principles, that these are the most important aspect for a free life in the future.
Okay, so let's say if investors want to take precautionary measures in view of the looming crisis, what assets should they be in, or perhaps start to think of moving out from?
Well, I mean, you can of course, stock or shares can make sense. I'm not the stock market trader, but of course, if you have a good company operating in a sound business, family owned, for example, which is not exposed to the stock market trends because the liquidity and the capital is held within a few hands, for example, I think that always makes sense. And I just, I focus on hard assets, of course. I mean, I truly believe precious metals is definitely physical. That's a must, I think, because gold and silver is our money. for 5,000 years, just because we had now 50 years of pure fiat and maybe 2 generations forgot that gold is money. Doesn't matter, 5,000 years of history will come back, and still people running around with jewelry and so on. So gold and silver definitely is something to have. Then I also I support the solution that is doing the same mainly with base metals here in Switzerland, for example. Mm-hmm. So I think you can invest in base metals, in several metals, and then really trade it actively, meaning maybe 1-2 trades a year, but basically using that portfolio to sell, when one asset is going up, tin, for example, or cobalt, that you really can sell it and then you repurchase, and it's highly liquid. But I think hard assets, commodities, are cheap for the time being, and so physically, to have it physically, but outside, so really stored somewhere. Not in the paper market. I think that's a good solution. And I also joined now a company that is we want to create a private Swiss currency, which is fully backed up by hard assets, meaning we own 30% are Swiss companies, stocks that we own, selected ones. 30% is gold and silver outside the banking system. And 30% at the moment it's Swiss franc paper notes, because everything is too expensive and too high. So we hold the cash, but in paper, so that when during the next correction that we can buy, maybe could be real estate. I mean, real estate can also make sense, of course, or if base metals or whatever, and then we can tokenize these shares on the internet. That will be done by the end of the year, and then people can use it as a currency tradable on the blockchain, which is backed up by hard assets. So it's going to outperform all the other currencies, and at the same time it's under Swiss law. So we don't have to follow any other rules and regulations. And in combination with the internet and the way we set it up, we believe it's a great tool. And that it's like these are the kind of opportunities coming out if the system is heavily manipulated, and so you have to think outside the box to set you free. And I think those kind of ideas basically go in that direction. And that's a possibility how people can protect themselves.
Okay, we'll get back to that shortly. What do you say to people right now when they tell you still gold has no yield?
Yeah, especially now. As we mentioned before, do you want to really, all these guys who are looking for security. People don't like risk. So all these guys, that's why they were purchasing treasury bonds. It was, bond business was a great business because it was safe. Governments don't go bankrupt. It paid you a certain yield. That's all gone now. We are questioning the bankruptcy of governments. We had 57 bankrupt or hyperinflations in the last century. So governments go broke. And at the same time, you basically have to pay the government that you can borrow their money. Doesn't make sense. And with gold, so the debate has always been, but I have to pay storage fee and I have the insurance and these costs. But these costs are now lower than when you would invest in those bonds. And at the same time, the upside potential for physical gold and silver, it's much it's much higher. So I think it's for everyone that uses common sense. At a certain point, more and more people, even in the West, will understand that it would make sense. Take out some of the money out of the system and put it into gold, because it's a great trade, I think. But long term, don't speculate. Put it on the side. Do it with money you don't need in the next 5 years, just to be on the very safe side. And I think then you cannot do anything wrong.
Yeah. Okay. Last question. With what's going on, do you see institutional investors starting to come back into gold?
Yeah, that's an interesting point. I have received many more requests. I also had quite some meetings over the last 3 to 4 months, especially from, financial companies. Some of them even came from the fixed income business, from from the Middle East, from Europe, from Australia, and also some from the States. So, and that's something new. I mean, so these guys they are interested. They consulted me. What about gold? Why outside the banking system? How would you do it? How do we need to do the setup and so on? So they really were looking for education and how to structure certain things. So definitely, I mean, that's a good sign. So that there is more stress and people are looking to protect them. And I think they see that it's now more necessary than it used to be, a few years ago.
Okay, Claudio Grass, before we wrap up, can you tell us more about what you're doing, such as the project you just mentioned, and how our followers can find your articles?
Yeah, so I write on a regular basis articles about monetary policy, history, geopolitics. You will find everything on claudiograss.ch, my homepage, and then I'm focused on hard assets. I mean, so if I have people, can be institutionals, can be high net worth individuals. I also welcome every time if we have some people who don't have a lot of money to invest, but if they shoot me an email, I'm really more than happy to help them, because I think everyone that owns a bit more gold, it makes the place a safer place, especially the region where they're in. So I'm happy to help them, that they don't make the big mistakes. And then at the same time, I can offer solutions in as I mentioned, base metals, which are it's not regulated for the time being, so it adds privacy. It's pretty secure. It helps for diversification, risk diversification because of gold confiscation and so on. But I do everything over here in Switzerland and also Liechtenstein, which I consider the best jurisdictions. Definitely Singapore is an option as well. We discussed that, I think, the last time. And now, of course, the new one is I'm really following those tech companies, fintech. But there I'm really focusing on those kind of people who share the same values as I do. So it needs to be decentralized. They need to be liberty-loving individuals. They need to understand that they have to innovate things which are empowering the individual and are not helping, a centralized system to become even more totalitarian. And so even in the crypto business, you have a lot of these bankers jumped in when they realize, that they can make a lot of money. So so you have to separate the crowd. I mean, some of them are great individuals, highly intelligent, highly talented people. And then, of course, you have the trash or, the guys who are just there to, make another dime or whatever. But that's what I'm doing. So I'm also, if I see something, I write about that stuff. And that's it, basically.
Okay, Claudio Grass will be sure to point people to the direction of your website, and we look forward to having another chat again in the near future, and hopefully the world is still glued together.
Yeah. All right, Patrick.
That was Claudio Grass with his views on sound money, freedom, and precious metals. To find out more about Claudio's work, please visit his website, claudiograss.ch. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content, and do also check out the SBTV podcast on iTunes and Spotify.